Hey guys, Fred Pacelli here. So one thing I want to talk about quickly today is two deductions that most small business owners can take or self-employed individuals. So they're both going to be related to if you're working from home, working remote, and you own a small business. So the first one is going to be the straightforward traditional home office deduction. There's two methods with this. There's the direct method and then there's the simplified method. The direct method is when you're actually going to track all the expenses that you're spending really to run your business out of your house. And essentially you're going to have to track that throughout the year. It's going to be formula driven. So you're going to have to know the square foot of your office or your workspace and then also your entire house. Now, the other option to that is the simplified method, where basically it's just going to be a formula, and then essentially it's going to be basically the square foot of your office space, let's call that 200, and then it's going to be the square foot of your house, let's call that 1,400 square feet. It's going to be those two amounts put into a formula, and there's also going to be a maximum deduction threshold that you can take on that. Normally it's around 1,500 in maximum deductions that you can get for the simplified method. So both things I just said, the direct method and simplified method, those are both home office deductions. Now, the other one I want to touch on that is very similar to home office deductions is going to be this thing called the Augusta rule. Now, what is the Augusta rule? You might have heard of it. You might have heard some other individuals talking about it. This is essentially where you're going to have two entities. Let's say you have you yourself as the person, and then you have an S Corp, which is separate LLC. This is when you own your house and you as the individual, you are going to rent your house out to your S Corp for no more than 14 days at a normal market rate that you would be able to rent your house out to if you were doing to another company. So you have to come up with a fair rate. And then essentially what's going to happen is you can rent it out for qualified business meetings, board meetings, anything that you can prove and is substantive to running your business, you're going to be able to rent it out to your S Corp. Your S Corp is going to get that as a deduction on the S Corp tax return. So it's going to be a rental expense, only 14 days worth. And the rental income, you as the person in this case, based off certain IRS tax law, in this instance for the Augusta rule, you're not going to have to report that as rental income. So normally the way you do it is you would have to report rental income, but then you would basically match it to have the same amount of expenses. So the net rental income will be zero as on your personal tax return. So there's a few moving parts with the Augusta rule. You have you yourself as an individual renting out your primary residence to your business, an S Corp. You're going to be taking that as a tax deduction on the S Corp tax return, therefore lowering your ordinary business income, which remember flows through to your individual tax return. And then essentially that's going to be reducing your taxable income at the end of the day. The key thing here is you as your person, the individual, you don't have to report that rental income. Now, something to show proof that you actually did the rental is you will normally have to issue yourself a 1099 from your S Corp. If you guys ever have more questions on the Augusta rule or even the simple business home office deductions, don't hesitate to reach out. They can definitely get a little complex, especially the direct method for the home office deductions and definitely the Augusta rule.